Good morning, folks, and welcome to the pre-market insight for January 10th, 2019. We have a bit of work and explaining to do. Let's go. We're looking at a chart of the ES S&P 500, and we're on the monthly time frame. Now, all the way back sometime in probably the middle of 2019, I began talking about this pattern that we were making on the S&P 500, which is known as a broadening formation, which is that we had higher lows, lower lows, but we were also having higher highs, a broadening formation, which speaks of range expansion. And generally speaking, within a range-bound market, when you find yourself in the midst of a broadening formation, you can expect some mean reversion at the extremes of the range. So it paid within this range previously to be short at the highs, to be long at the lows. But what we effectively had in the last half and the last quarter of 2019 demonstrated quite clearly that we had a significant breakout to the upside, and then we've had now 5 consecutive months of gains. And so if we take this down to the lower time frame, you can see we've been actually building value at the highs. We have been accepting prices at the highs. So for many of those, or many of you out there who may be astounded as to what is going on in the indices, why does it continue to rally? Why do 80 and 90 point dips continue to get bought up and then we are trending? It is because we are in a trend now, in a clearly defined upward trend after that monthly breakout on the ES and the NQ. And so what can we expect for today's action? For today's action, you can see that clearly once we broke out yesterday above this 3264 level, that was the previous all-time high set just only last week in the pre-market session, we ranged, which is very, very important to note. We were accepting prices at these higher levels. This is extremely bullish given the fact that we've had some iffy geopolitical headlines and we broke out to the upside at the end of the regular session yesterday. And in the overnight, all we've done is tacked on a few points to rub salt in the bear's wounds. So right now we have an overnight high of 32.85. Let's see if that holds into the regular session. We may have some drift to test yesterday's lows at around 32.64, but given the seasonality, given the context, given the area we are, and the bullish continuation and the price appreciation that is coming in because of the aggressive demand, I think 32.64 may be a good spot to position long, but definitely we are still within the midst and the context of geopolitically iffy time. I would not probably, for my liking, be holding into the weekend unless you have hedges or portfolio insurance in place. Keep it simple, smarty. We have job numbers being reported and released later on today. Let us wait and see how the market accepts and deals with those numbers. We can very easily see a push into the psychologically important and big round number of 3,300 on any good news that is not priced in, that can continue to push to give this market a reason and an excuse to continue its surge higher to the downside. If 32.64 does not hold on some sort of negative report, then 32.64 might be the first stop. Then once again 32.52 or thereabouts, or all the way back into this high volume node at around 32.42 and 32.20 to the downside. Be safe out there today, guys. Cheers.